Welcome back to Gold Rush Reporter, the home of honest, data-backed analysis for gold and silver investors. Before we jump into today's market insights, I want to take a quick moment to share something personal and important. Because as analysts, we don't just talk numbers. We live the realities that shape them. Now, as some of you may already know, I'm currently in a custody battle for my daughter. It's a tough journey, both emotionally and financially. Legal cases like these are unpredictable, and the costs have piled up quickly, especially since I've chosen to work with a strong lawyer who can really make a difference. Any parent would do the same if they were fighting for their child, and I'm no different. To help cover these heavy legal expenses, I created a GoFundMe. And thanks to this incredible community, we're very close to reaching our goal. I'll be closing it within the next 24 hours, just in case anyone else still wants to contribute. Hopefully, what's already been raised will be enough to see this case through. Though, as we all know, the legal system doesn't always move as fast as we'd like. I've also shared a small update on the GoFundMe page for those who want to know a bit more. I can't say much publicly right now due to the ongoing case, but for everyone who's helped, your support means the world to me. You're not just subscribers. You're part of this journey. Thank you. Now, moving to something a little more positive. As a token of my gratitude, I'll be doing a giveaway next week. One lucky subscriber will win real silver, shipped straight to their doorstep. This is my way of giving back to the community that's given me so much. All you have to do is make sure you're subscribed to the channel and have notifications on. The giveaway isn't about numbers. It's about appreciation. About saying thank you to those who've stood by me through thick and thin. And honestly, I mean it when I say that your kindness has kept me going. Every comment, every like, every word of encouragement reminds me why I love doing this. And there's more good news. My upcoming book, Silver is the New Gold, is officially launching this Christmas Day. I've poured years of knowledge, research, and passion into these pages. It's not just another silver guide. It's my full analysis of how silver could become the most influential asset in the next global financial reset. Right now, I'm still fine-tuning it, making small adjustments to ensure it's the best work I've ever published. Industry veteran Andy Schechtman is writing the foreword, and I'll actually be doing a live show with him tomorrow, something you won't want to miss. The book will be available in both paperback and ebook formats, and for those who want something special, I'll personally sign each paperback myself. No printed digital signature. Every signed copy will come directly from me with a genuine autograph because you deserve authenticity. So, that's where we're at. Between the GoFundMe closing, the giveaway, and the book release, there's a lot happening behind the scenes. But it all connects back to this channel and this community. You've helped me keep pushing forward, and I'll never take that for granted. I'll continue bringing you real, honest insights on gold, silver, and everything affecting the metals market worldwide. With that said, let's transition into the analysis part of today's video. In the next section, we're going to dive deep into why the current silver price is misleading investors, and how understanding the psychology behind price movements can give you the edge every stacker needs. Stay tuned, because what's coming next will completely change how you view silver's short-term drops and long-term potential. Welcome back to Entlau, Gold Rush Reporter, where we uncover the truth behind market moves that most analysts never talk about. In this part, let's talk about something that confuses both new and seasoned investors: price misdirection. Price isn't always what it seems, and if you let it control your emotions, it can easily lead you into making the wrong move. Right now, a lot of people are watching silver drop from around $54 to $47 and thinking, what's going on? Is this the start of a crash? But before you let fear take over, take a step back and think like an analyst, not like a trader driven by headlines. The price of silver doesn't reflect its true value. It reflects short-term emotion, not long-term fundamentals. You see, markets are designed to test conviction. When prices fall, weak hands panic and strong hands accumulate. That's how the system works. The professionals, the institutions, the central banks, the long-term stackers, they wait for these dips to buy more. They understand that corrections are not threats, they are opportunities. They buy when others are scared because they know fear always creates discounts. This is what I call the psychology of price. When silver is rising, everyone feels confident. When it falls, everyone doubts themselves. But the metal itself hasn't changed. Its industrial demand hasn't dropped. Its supply hasn't magically increased. The only thing that's changed is perception. And perception can be manipulated. If you remember the fundamentals, you'll realize that silver is more than just a number on a chart. It's the world's most versatile metal, used in solar panels, electric vehicles, medical devices, AI components, and even military technology. The long-term demand curve is steep, and the supply deficit continues to widen every year. That's reality. The day-to-day price swings are just noise. Many new investors make one common mistake. They invest with emotion. They see a red candle and panic. They start comparing this dip to the last crash. But this isn't 2011. The global economy is in a completely different position. Central banks are printing money faster than ever. The industrial revolution for renewable energy is accelerating. Silver's demand is locked in. The fundamentals are stronger now than they've ever been. Let's talk about strategy for a moment. Smart stackers use dips like this to lower their dollar cost average. When prices fall, it's not the time to sell, it's the time to strengthen your position. Think of it like buying your favorite item on sale. You wouldn't complain that it's cheaper. You'd buy more. The same logic applies to silver. These are moments to accumulate, not to panic. Another thing to remember: corrections are necessary for healthy market growth. When silver jumped from the low 30s to over $50 in just a few months, that was an unsustainable move. A pullback was inevitable. Markets need balance. The correction we're seeing now is not a sign of weakness. It's a natural reset that builds the foundation for the next major rally. So, don't let fear dictate your decisions. The people who lose money in silver are the ones who chase emotions. The people who win are the ones who understand patterns and act with logic. In simple words, don't think like a gambler. Think like an investor. Gamblers react, investors anticipate. Gamblers follow the crowd, investors move before it. Price manipulation, fear-driven headlines, and emotional trading are all tools designed to keep you distracted. Don't fall for it. Look beyond the short-term charts and focus on the bigger picture. Because once this correction settles, those who stayed strong will be the ones holding the real wealth. In the next part, we'll take this conversation global, exploring what's happening in Shanghai and COMEX vaults, where physical silver is disappearing at record speed. These outflows aren't just numbers. They're signals of a market under immense pressure. And once you see what's really going on behind those vault doors, you'll understand why the next phase of this silver story could be explosive. Now that we've understood the psychology behind silver's price moves, let's look at what's happening on the global stage, because numbers don't lie, and the data from the world's biggest vaults is painting a very clear picture. The physical silver market is under massive strain. COMEX inventories are falling. Shanghai's silver outflows are accelerating. And the question smart investors should be asking is, why are they draining so fast? Let's start with the COMEX, the central hub of silver trading in the US. Over the past year, COMEX registered inventories, the silver that's actually available for delivery, have dropped by more than 50%. That's not just a correction, that's a structural shortage. When inventories fall like this, it means more people are asking for real silver instead of paper contracts. They're taking delivery. They're not trusting the system anymore. And this trend isn't isolated. The Shanghai Futures Exchange is showing the same pattern. China's vaults are being emptied at an even faster rate. Just last month, Shanghai lost nearly 500 tons of physical silver in a single week. That's one of the largest withdrawals in recent years. When you combine that with COMEX data, it becomes obvious. There's a global race to secure real silver, not just hold contracts on paper. Now let's connect the dots. Why is this happening? Part of it is industrial demand. Silver is the backbone of the green energy revolution, used in solar cells, EVs, and every major clean technology you can think of. China, India, and Europe are all pushing to expand renewable production, and that means they need more silver every quarter. These countries aren't waiting for the price to rise. They're locking in supplies now, while it's still relatively cheap. The other part of the story is monetary distrust. Around the world, people are losing faith in fiat currencies. Central banks are printing at record levels, debt is soaring, and inflation, though manipulated in the reports, is still eating into purchasing power. This is why investors and even governments are quietly building up their reserves of gold and silver. They know the paper system can't hold forever. Physical metal is real wealth. No counterparty risk, no digital interference, no government switch that can turn it off. But here's where it gets really interesting. Despite this physical shortage, the paper silver market is still pretending everything is fine. Futures traders are shorting silver aggressively, pushing the price down artificially. But when they do that, the physical buyers step in quietly and scoop up even more metal. So, while the price drops, the real-world supply vanishes. It's a tug of war, but the side holding the physical metal always wins in the end. Think about it. If there's truly plenty of silver, as some reports claim, then why are vaults emptying at record speed? Why are delivery delays increasing? Why are mints struggling to keep up with demand for coins and bars? Because behind the scenes, the truth is that there isn't enough silver to satisfy everyone at once. The system runs on leverage, roughly 100 ounces of paper silver for every real ounce in existence. That's not a sustainable structure, it's a ticking clock. When confidence in paper money breaks, the world always turns back to tangible value, gold and silver. These metals aren't just commodities, they're anchors for trust. And the way this reset could unfold is both predictable and fast. It usually begins with a liquidity crisis. When major institutions start to fail because they can't meet short-term obligations. We saw a glimpse of this during the 2008 crisis, but back then, central banks still had room to print. Now, with interest rates already high and debt exceeding $300 trillion globally, printing more only accelerates inflation. That's why, next time around, the solution won't just be more stimulus. It will be monetary restructuring. The process could start with a Gold revaluation announcement. Likely from a major economic bloc, possibly BRICS or a coalition of Asian economies. They could declare that their currency is now partially backed by gold, instantly forcing global markets to reprice assets. Gold would surge overnight, and silver would follow violently because it's the more accessible monetary metal. Once the first domino falls, other countries would be pressured to do the same to avoid devaluation against the new gold-backed standard. The second phase would involve banking system consolidation. Weak banks would merge or collapse. Governments would push new digital currency systems, marketed as modern and efficient, but the real purpose would be control. These digital systems will likely coexist with revalued precious metals, the metals acting as real reserves, while digital currencies act as transaction layers. The countries that already hold enough gold and silver will dominate this new structure. Those without them will struggle to keep up. During this transition, expect some extreme volatility. In paper markets, spot prices might temporarily freeze or disconnect from physical prices. Dealers could stop selling altogether as premiums explode. We might even see governments step in to restrict large-scale purchases, just like they've done in past crises when metals became too politically sensitive. History has shown that during financial resets, access to real money becomes limited for the public. Not because there's no metal, but because those in power want to control who gets it. This is why physical ownership matters more than ever. When the system resets, it won't care about your ETFs, your futures contracts, or your promises from a bank. It will care about what's real and in your possession. Having physical silver and gold will mean having sovereignty, the ability to move through financial chaos without waiting for permission. One often overlooked aspect of the reset is the psychological shock it will create. Most people today have grown up in a purely digital economy. They've never questioned the idea of a currency without backing. When that illusion breaks, trust will collapse instantly. There will be confusion, fear, and anger, especially from those who ignored the signs. But for those who prepared, it will be the greatest wealth transfer of their lifetime. It's important to remember that resets don't destroy wealth. They redistribute it. Those holding assets that retain real value come out on top. Those who depend on the system lose. That's why central banks and large investors have been preparing quietly, while the public is distracted with political drama and social media noise. In summary, the coming reset won't be a sudden overnight event. It will unfold in stages: liquidity shock, revaluation, consolidation, and reconstruction. But once the new structure is announced, the time to act will already have passed. The best defense is preparation, not reaction. In the next and final part, we'll wrap up this series by looking at what investors can do now, how to position themselves smartly, balance between gold and silver, and navigate the turbulent years ahead while protecting not just their portfolio, but their peace of mind. When we step back and look at everything we've discussed, from emotional manipulation in markets to vault drains, central bank accumulation, and the coming financial reset, one thing becomes crystal clear. This isn't random. It's a cycle, a slow and calculated transition away from debt-based money toward tangible assets that hold real value. And those who recognize it early will stand on the right side of history. The current system is showing cracks everywhere. Massive debt, declining trust in fiat currencies, and geopolitical conflicts pushing nations to protect their reserves. Yet through all of this, gold and silver continue to shine as symbols of independence and resilience. They don't rely on promises, they don't default, and they don't need a network to function. They're the only form of wealth that survived every empire, every crisis, and every reset. If you've been following this series closely, you now understand what's coming, and more importantly, why it's coming. The short-term market noise doesn't matter. What matters is positioning yourself for the long game. That means holding real metal, reducing reliance on paper promises, and staying informed. Because once the official reset begins, everything will happen too fast for the unprepared to react. Silver, especially, will be the metal of the people. It's undervalued, underowned, and industrially essential. When the world realizes that there's not enough silver to meet both industrial and investment demand, we'll witness one of the biggest price shocks in financial history. And those who've quietly built their stacks during these quiet times will be the ones holding the real leverage. Remember, patience is your greatest weapon. While the mainstream investors chase digital assets and quick gains, real wealth is being transferred in silence, from weak hands to strong hands. The coming years will separate speculators from survivors. Choose to be the latter. And with that, I want to thank each and every one of you for being part of the Gold Rush Reporter community. You've stood with me through thick and thin, supported my work, and helped me continue bringing you raw, honest analysis that cuts through the noise. This channel exists because of you. Not sponsors, not algorithms, but real people who care about truth and financial freedom. If you found value in today's discussion, make sure to like this video, share it, and leave your thoughts in the comments. I read every single one, and don't forget, the WOG Silver giveaway is still happening next week, so if you haven't subscribed yet, now's the time. Hit that bell icon so you don't miss the announcement. Also, keep an eye out for my upcoming book, Silver is the New Gold, launching this Christmas Day with a special foreword by Andy Schekman. It's my most detailed work yet, packed with strategies and insights designed for serious stackers like you. Signed copies will be available exclusively for channel supporters. We're not here to follow the herd. We're here to understand the truth. The reset is coming, maybe sooner than most think, but those who see it for what it is will not only survive it, they'll thrive through it. Until next time, this is Gold Rush Reporter, your trusted gold and silver analyst, signing off. Stay strong, stay informed, and as always, keep stacking.